You're listening to The Wealth Advocates with finance experts John Mickelson and Patrick Jenkins. The Wealth Advocates simplify the financial world and show you how today's events could affect your financial health so you feel confident about your financial future.
Good morning, Wealth Advocates Nation. It's great to be back with you. We're here with Olivia Williams, our on-staff expert at taxes. This is a great topic, Olivia, because what we're seeing occurring with our clients is the tax deadline is coming later and later every year. That means the CPAs, or the tax planning professionals that they use, are always underwater and trying to catch up with late K-1s, late tax forms. They're swamped all the time. My people, my clients, they can't get in front of the CPA to do tax planning. That really rolls a lot of more tax planning and tax savings ideas onto Wealth Advocates. So we're glad to have you with us. Today we're going to talk a little bit about common mistakes made with taxes, right?
Yeah.
Okay, well, let's dive into it and tell us some common mistakes made with taxes.
All right, so the first one we're talking about today is assuming that you and your accountant are aware of all the tax documents that you're going to be needing that will be generated from all your accounts. Obviously, we will be paying attention to what accounts you have and trying to find out what documents are going to be generated from those so that we're ahead of the game before tax season rolls around.
You know what happens there is the CPA will look at, here's all the 1099s, K1s, W2s that I saw last year. Where are they this year? And they come in different formats. We're going to talk about how that changes too in a second. But they know only what you tell them, right? And there's this big confusion in there because you've got three people at least in the process. You've got the CPA saying, this is what I got last year. You've got the filer, let's say that's me, and I sent them everything I got. I think that's everything. And then you've got the financial advisor, and things may have changed. And it's kind of behooves it for all of us to come together and coordinate things. One of the things we're doing at Wealth Advocates that's a little different this year is we're tracking all your investments. We're going to stay a little bit more ahead of the game so that we can proactively get these tax returns and tax documents to your CPA on time or early, or as soon as we get them at least. And that's becoming more and more of a problem. So our own checklist will help walk through it. And the other thing we're going to do is in the fourth quarter, we're going to sit down with all of our people and say, okay, what happened this year? What occurred in your life that impacts your taxes? So we'll do a little tax planning with them, but also it will give us that oversight on, okay, these are the forms we need to watch for. We're going to put that in their file. We're going to help their accountant a little bit more this year. All right, well, let's talk about number two. It rides right on the tail of number one. It assumes that your accountant knows what tax documents you'll provide. Here's one of the more common scenarios, at least in the financial advisor world, which is maybe we changed investments, maybe we changed investment companies. The CPA would never in a million years know that. And the client probably knows that. But really, Wealth Advocates needs to be ahead of the curve and say, okay, well, these are the changes that are occurring. So we want to work more with your CPA, with your accountant, your tax professional. This is the secret sauce of wealth management. It is keeping your financial advisor and your CPA in tune, talking to each other, coming up with tax strategies for you, making sure that the communication includes, these are all the investments that they're in and why. So what's number three?
Well, this is being aware of those implications that comes with those tax plans or those investment plans that we are creating with you. Obviously, we try to coordinate with your accountant so that those plans, they're made aware of those plans. So when tax season rolls around, they know those changes that have occurred so that it's not as confusing knowing which documents they're getting. But obviously, sometimes those fall between the cracks, and we have that responsibility of helping you and your accountant stay coordinated with us so that those investment plans and that tax plan are aligned.
Yeah, and sometimes we talk about the most favorable thing to talk about in tax planning is the micro tax plan, what's happening this year. But that's not reality. Reality is we need to talk about this year, and we also need to talk about the long term. So for example, we know in 2026 the taxes are going to go up. It may happen before. We just recorded another podcast that talked about Senator Manchin's new jumping on the Build Back Better plan, which is a huge tax to the middle class, so it's going to go before. Well, if we know taxes are going to go up, we had to do a Roth IRA conversion, or we ought to look at other ways to get some of the IRS out of your retirement. Well, that's a longer term tax plan, and the CPA only has a very narrow perspective. They can see what you did this year, and that's what they report on. And so your investment plan may defer and deter from what he sees in your tax plan. Another argument for let's coordinate better. So here's a mistake number 4. Assuming you'll receive all of your tax documents. This happens to me every year personally. Like, I got all my documents to my accountant prior to April 15th. April 18th was the tax filing date this year. On July 1, I got another tax document. I got another K1. Holy cow, what am I supposed to do with this? So I have to go redo everything. And, I think we're also going to talk about this one in a second, so we'll double talk about it. But most companies aren't even mailing the tax documents anymore. Now they're coming in electronic mail. I use my junky Gmail that I don't look at ever for all these companies, and then I have to go through and pilfer through and look for 1099 or some tax form that I wasn't aware of. So taxes have become very, very tricky just because of how we receive it. And some companies don't send them. Some companies, I worked with an annuity company this year, for example, that had I not requested a tax document, even though the client was getting a required minimum distribution, they had a distribution out of the IRA, well, they weren't going to send a tax document unless I asked for it. So it's getting a little bit more tricky. What's number 5?
Number 5 is paying less tax now. So this goes back to what we were talking about earlier about, your accountants looking at these short windows. They're looking at that year where, what are we going to do to lessen your taxes that you pay now? But we're trying to figure out that long-term plan. Where are you going to be when you retire? What is your tax bracket going to be then, so that we can plan now so that it's a little bit more balanced. You're not taxed a ridiculous amount when you're retired and don't want to pay those taxes.
Oh, that is spot on. So this is the micro tax strategy versus the macro tax strategy. In addition to everything else that's going on tax-wise, the Senate and the House have passed different versions of the Secure Act 2.0. Now, the Secure Act 2.0 may or may not impact our listeners immediately, but it will impact their kids. So it means that if your kids inherit an IRA from you, they have to take a distribution every single year for 10 years and deplete that IRA. They've got to get everything out of that IRA. There's exceptions to this, but in the broadest sense, let's say one passes, their children inherit it. Likely that timing occurs when the kid is already in their top earning years, therefore their top tax bracket, and they're inheriting more income from you. So one of the things that we're doing that maybe the CPA that looks at just the here and now doesn't love is we're saying, okay, well, let's get some of this money out of IRA for them because your kids are going to get killed in taxes. And that's an example of a macro tax strategy, a long-term tax strategy versus a micro tax strategy, the here and now. They differ sometimes. All right, well, let's talk about mistake number 6. Number 6, assuming that you've provided complete information. Holy cow. If you submit all your documents to your accountant and the IRS got different documents than the accountant did, who's at fault? Who gets to go to jail here? The filer. The filer. And oftentimes the individual filing taxes or the CPA filing on behalf of the individual, they just don't know all the things that they're getting. Here's a weird example. I have a couple clients that have inside their IRA a property that there's oil drilling rigs on. So in addition to deferring income taxes from the gains of that, every year it kicks off an unrealized business income tax that they have to pay on. And they'll say, well, wait, I thought this was IRA, so I don't have to pay taxes on it right now. But this UBIT tax, it requires that you pay a little bit every single year, just the way the thing's structured. So It is a dangerous game to assume that we've got everything. This comes back to we ought to coordinate the individual client, wealth advocates, and their tax preparer, just so that we're all on the same page. That is the secret sauce to wealth management. All right, give us number 7.
Assuming that using a tax preparer means all things tax related are covered. This kind of goes along with IRS being things are not always the same where you go. And so you may need to have this conversation between all 3 individuals and make sure that all these things that maybe got lost in the thrill of things, the year, it's a busy year, you're going to forget things that happen in January when you're getting ready to file in April. So those things get lost and you have to make sure that they're all there, and that's what we help coordinate.
So good. Yep, we're spot on. Let me give you number 8. Number 8 is an awesome one. Assuming that tax documents are infallible. The company kicks out their tax document. What ends up happening is they send the client a tax document. They also send the IRS a tax document, and that's how that audit occurs. Well, sometimes they're wrong. Sometimes they are just wrong. I didn't get that kind of income. I think you filed it incorrectly. I don't even know who you are. Sometimes they're wrong, and here's the best example of one that's wrong. When there's a rollover that occurs. It might be a Roth IRA rollover. It might be a rollover from IRA to IRA or 401k to IRA, custodian to custodian. Anytime there's a rollover that occurs, the custodian has a responsibility to send the IRS. Custodian has a responsibility to send the IRS a 1099 that says a distribution occurred. And it's the receiving custodian responsibility to say, oh, we received it inside an IRA, but they're not going to mail it to the IRS. So the IRS is going to say, you owe us money. You took a distribution out of your IRA, even worse if you're pre-59.5, because you owe us a penalty too, and we'd like our taxes, please. And so now the CPA, the financial advisor, the client, we get together and we say, no, it went from IRA to IRA. No distribution truly occurred. It happened within that 60-day window. No taxes are going to be paid. This is where it pays big dividends to have a good CPA working with wealth advocates, because the CPA calls the IRS, explains the situation. The IRS are rational people for the most part, and they understand that this kind of error occurs frequently, but never assume that your tax documents are infallible. There's mistakes that are made. Olivia, walk me through some common questions that you hear from people.
So the first question a lot of people ask is, how do I know when I have all my tax documents? And this is something that we're trying to coordinate with our clients, is making sure that we have a list of what accounts that they have and which of those accounts they're either taking RMDs from or that are taxable, so that when it comes time to start preparing those taxes for your CPA, so we can transfer all those things over, we already have a list of what documents are needed, and we can go pull those for you if you don't have them already.
This is a big deal to us. You know, like you just articulated so well, we've come up with a whole new checklist process, but this is why we spend the second quarter and the fourth quarter helping you with your taxes. The second quarter is what happened in taxes that year. The fourth quarter is let's get you ready for taxes next year. What can be done? And in all of those, we create a checklist that says, oh, you have this going on and this going on and this going on. Therefore, these tax documents are going to be required. What else?
All right, number 2 is, who should I call if I don't know what to do with the document I get in the mail? Give us a call. We would be more than happy to help you know what that document is and how it relates to your accounts.
Customer service is the number one important thing at Wealth Advocates. So spot on. Give us a call. What's the next one?
What about the tax law changes? So like we've talked about Secure Act 2.0, we can make an guess about what things are happening, but we're not going to base what we do entirely on that because it's not set in stone right now. We're going to do our best to coordinate your plans for where you're at now, where laws are now, and then take things as they come.
And to that point, things are changing frequently. Watch this podcast, like and subscribe, because we're always going to keep you up to date on what's happening with tax code. As a firm, we spend upwards of $50,000 a year staying abreast of what's happening with the tax code and coming up with ideas on how you can keep as much money in your pocket as the government incentivizes us to do. What's next?
Can I still give to charity for last year?
Taxes are due on April 15th. Can't I just give to my church on April 15th and count it for last year?
Unfortunately not.
It's a calendar year thing, huh?
Yeah, sorry.
Yeah. You know, we always want to fix we always want to fix our tax problems from January to April, but there's only a handful of things we can still do. Charitable contributions are not one of those. Okay, give us one more.
Last one. How come my tax preparer is telling me it's your fault I must pay more in tax this year?
How come?
Well, it goes back to the micro versus macro view that we have on these taxes. We're trying to make it, over the long term, the best possible scenario for you. Mm-hmm. And might mean this year you're paying a little bit more taxes than you probably want to.
Mm-hmm. So true, so true. So those CPAs, bless their hearts, they only see what we give them visibility to. And we try to bring them in once a year with the client so that they have a larger purview on what's happening in the estate, what our intentions are, what our plans are. But again, they're so pinched for time in doing taxes that frankly, they don't always have time to jump into that with every single client. So it becomes Wealth Advocates' responsibility to jump in and help with tax planning and help with retirement planning. And we'll also try to coordinate with your accountant to make sure they're aware. So Olivia, tax experts, thank you so much for all you're doing. Give us a couple takeaways. Anything that we should just pay real close attention to?
Well, honestly, I think it's just making sure that we're all working together. I think that is the gist of what we've talked about today, is that if we're not coordinating with you and your accountant, then it's gonna kind of fall apart.
You nailed it. That is Wealth Advocates' primary value to our clients. We match your investment plan with your tax plan, with your estate plan or legal documents, with your income plan and your risk plan. We try to make sure all those things are working together. We happen to speak investmentees, legalese, CPAs, and that's the real value we bring to our clients, is that level of efficiency of coordinating your estate. Olivia Williams, thank you so much.
Thank you.
Great insights today. Have a great day.
Thank you for listening to The Wealth Advocates. Join us every month by subscribing on Apple Podcasts, Spotify, or Google Podcasts. You can also look for The Wealth Advocates on Stitcher and YouTube. Want more information about today's topics? Reach out to John or Patrick directly by calling or texting the Wealth Advocates office at 435-754-7888. Learn more about the Wealth Advocates and how they can help you by visiting www.wealth-advocates.com. Securities offered through registered representatives of Cambridge Investment Research Incorporated, a broker-dealer member FINRA SIPC. Advisory services offered through Cambridge Investment Research Advisors Incorporated, a registered investment advisor. Wealth Advocates and Cambridge Investment Research Incorporated are not affiliated.